Are we ready? Put ready on the chat. Let's shoot. So what's your trading strategy? Can any one of you tell me what your trading strategy is? You've been able to get used to a trading strategy. Let me see if I can use that pen. Okay. You have a trading strategy, put a trading strategy. Let me know. Okay, because at the end of the day, one thing that makes your trading, one of the things that makes you different or in the area of mastering the skill is you have the knowledge of the technical. You are psychologically evaluated. You are risk managed, and you have a strategy. Okay. So I could put it, I'm not sharing the screen yet. Let me share the screen. So you guys need to write this down. Not a gamble. If you want to know it, you have to know it. Okay. So this is just, I just want to write this down so you guys get it. Okay. One, centered around one, knowledge of the skill. That you have an understanding of trading psychology. Number three, risk management. And number four, you have to understand strategy. Okay, you have to, these are things you really have to understand in trading. Very critical. Okay, knowledge of the skill, all right, is going to give you, so this is 20% of your success. All right, this is risk management is 20% of your success. Strategy is 10% of your success. Okay, that leaves you with 50%. And this is even, I'd say this is knowledge of the skill is 15%. Okay, risk management is 15%. Okay, so that makes 60% because psychology falls way, not in the same league. This is not in the same league. A lot of traders are failing today because they don't understand the psychology of trading. All right. It's very important you understand psychology of trading. And there's no way you're going to understand psychology of trading if you do not have a proper understanding of yourself. Okay. So trading is a mirror of who you are. So if you do not understand who you are, you're going to be a gambler for life. Okay. So that's why a lot of people don't do well. So that's something you want to dig deep in. I've been doing a lot of trainings on psychology. It's beyond what you see. Psychology of trading, psychology of the market, psychology of money. Psychology is a big thing a lot of people really have to play in, but that's not the topic for tonight. Today is really, all about strategy. So strategy is 10%, is the trigger. So we call it strategy is your trigger weapon. So every battle you have, you're going to fight. Trading, you're battling for every time you come into the market, you're necessarily in a war. Okay. So you have to understand what weapon are you using. So the weapon of the knowledge of trading is your trigger. What trigger are you using? What's pulling the trigger? So the trigger of trading is actually your strategy. What are you using? Okay. All right, to trade, because that is actually what leads your psychology. Everything you are doing, the skill set, the knowledge of the skill set, everything getting into relating your money into result is what? Your strategy. If you do not understand the strategy, you are gambling. So you want to make a decision, am I a gambler or I'm a strategic trader? I'm a trader who understands the knowledge and I understand the strategy of implementing this knowledge. So we have different strategies in the market, different approach. Strategies are like approach. Okay, so there are different approach. What approach are you using? What trigger? At what point do you make that trigger? What weapon are you using? What type of gun are you using? Okay, and what is your timeline of execution? So everything falls. Strategy encompasses your approach to trading. Okay, your type of trading, timing of trading, and your risk approach. Okay, your technical approach. So this is T approach, this is arrow approach. Your technical approach, your type of trading. What type of trading are you doing? Are you scalping, or are you day trading, or you are swinging? Okay, what's your timing of trading? It means the timing encompasses your checklist. So it's not like the timing on time. Okay, is what are the things you put together before you take the trade? Your timing, your timing of execution. What are the things required for you to put a trade on? Okay, that's your checklist. It means it has to break above, it has to hit a certain number. What are the checklists you're using to actually execute a trade? The moment you write all of these things out and you begin to tick them before you get in on trade, then you are that's what makes you a strategic trader. Then you are not just someone the market can bully because you're being strategic. There are things you have to look at before you take a trade. Like when you see me use the perfect entry trading strategy on binary option, there are certain things I'm looking at. So I don't care what the market is doing. I don't even care what sentiment is doing. There's a combination of sentiment, there's a combination of technical, there's a combination of momentum, all right, there's a combination of timing. So you can see all of these things are strategic, and it all falls in the point that I am doing scalping. When I'm trading binary, it's necessarily scalping, it's timing trading, okay? So you can see that I tick what type of trading, I tick timing of trading, which is the checklist, and I tick my approach, because at the end of the day, I always tell you guys, okay, do not, for 1% for trades that are not timing, 2% for trades that are timing. I am applying my risk approach and my technical approach, which is charting. At the end of the day, that is what makes up a strategy. Are you guys getting me? Put 5 on the chat. I just used an example right now, my perfect entry trading strategy on binary, okay? It has a technical approach. True or true? Okay, I chart. I don't just come and say, okay, I'm going to buy this here. I chart it up. So charting is a technical approach. It's ticked. Okay, a strategy should have a technical approach. A strategy should have the type of trading. Is the strategy a scalping strategy, or a day trading strategy, or a swing trade? Because all of them are different in approach. The moment you understand, you cannot be using a technical strategy for day trading to execute a scalping approach. It doesn't make sense. It's not going to work. Are we together? Put 5. Put tracking on the chat if you're following me. So you have to understand the type of trading to be good at it. Because if you don't understand the type of trading, you're just using one strategy. You went to look at it on YouTube and you say, oh, I want to come and use it to swing. No, it doesn't follow. They don't all align. You need to understand the type of trading, okay, to be able to use that strategy effectively. Then timing of trading, which encompasses everything, checklist, okay? It has to fall in my supply range. It has to fall in my demand range, okay? It has to, I'm looking at the FIB level, 50. It has to hit the FIB level before I get in. So there are certain checklists you're using for I'm just going to give us 2 strategies tonight, but I just want to give you all the fundamental of a trading strategy. What do you need to have a trading strategy? These are the five things. Is it 5? I think it's 4 things, okay, for you to become a strategic trader, a pro trader. Then it has to have a risk approach. At the end of the day, what risk? If you notice all of the trades that I do call, okay, there is a risk attached to it. When I send the chart, you always see what? 1 to 1. Then the next one is 1 to 2. TP2 is 1 to 2. Okay, there's a risk approach. There's a technical approach. So everything is there. Am I making sense? Put sense in the chat. Do you guys now understand what a strategy requires? So how many of you have a trading strategy? Let me know in chat. That has these 4 things. So I'm just going to give us 2 strategies. So one is break at. Okay. So there is a breakout strategy, and I'm also going to give us two strategies were in my mind: breakout strategy and okay, trading imbalance. It's actually a price action strategy. It's one off price action strategy. So breakout strategy, okay, BOS. So I'm just going to give it to you guys. So first thing, you have to understand price action. You have to understand pattern, chart pattern. So I'm going to give us different pattern on the market. And you guys, when I draw it, type it on the chat. Okay. What pattern is this in the market? Draw it on the chat. What pattern is this on the market? You guys communicate. What pattern is this on the market? So this is uptrend. This is downtrend. And this is what? Range. Ranging trend, or they call it consolidation or sideways move. You guys get it? These are the 3 type of pattern: uptrend, or 3 type of trend. That is sideways trend, upward trend, and consolidation trend. The breakout strategy works when you understand the trend. So for an uptrend, so price moves, watch this. Okay, so this is a trend of the market. When market breaks, when this occurs every time in the market, it's called what? Break of structure. This is BOS. Okay. Now, so everything here, this is liquidity, this liquidity, this liquidity. Okay, when market comes and breaks this, all right, this is called what? A break. When market breaks this, now, when this occurs, when market takes away a previous floor, this is called what? A swing low of the market. Because this is the market that took a swing low is the price area that took away the previous high. So this is a swing high. Okay. A high that was created after a break of structure is called a swing high. The low that took away the previous high is called a swing low. Are you guys getting this? I put tracking on chat. So this is a swing low because it what is the low is the price area that took away, okay, the previous high. So it's a swing low. What happened? So you guys need to understand this part. You have to understand the market, okay, for you to be able to trade it effectively. Now, when a break of structure happens, a high is created, and that high is called what? A swing high. A break of structure initiates a swing high, or a swing low initiates that initiated its break of structure leads to a swing high. So forget the English, just understand the basics. What is the basics? A swing low, okay, is a low that has been created after a break of structure. So this is a break of structure. This is the low before the break of structure. That is a swing low. It's very important to understand that price action, okay? Because what controls that move, that momentum that has been happening, okay, rest on that, all those what? Swing lows. So this is a swing low, this is a swing low, the swing lows. Every swing low holds liquidity until it's what? Tempered with. So now this is something I want you guys to know. Because in this, I don't just want to tell you guys the strategy. I want to tell you what leads, what formulates this strategy. When price comes back, it may be a one-time strike. Those are sometimes news. Okay, but price doesn't work that way. But what we're looking at is when price decides to come back, what happened here? This is actually a break of structure, right? Because why? That is actually what? A low. But that break of structure is not actually called, oh, what's happening? It's not actually called a break of structure, but it has broken structure. It is called what? A change of character. Chalk. Doing a little bit of teaching here right now. Am I making sense? Okay. It is called a change of character. And at the same time, it is called what? Market structure shift, MSS. It means the price has shifted, okay, from a bullish trend. The moment it changes character, it means market structure has shifted. So it's called a change of character or market structure shift when a swing low is taken out. Okay, so the breakout strategy occurs or happens when on this pattern, on this type of a pattern right now, when the market is bullish, it is a reverse pattern of a bullish market. Okay, so you're looking for, oh, what's going to alter the bullish market? Because why? Price has been buying. I don't want to get in on the buy. I want to see when it's reversed. So when are you going to know the market is going to reverse? When a market structure shift happens or a change of character happens. The moment you see that in the pattern, okay, two things you want to watch out for. I've always thought this, but this is good. Wherever there is a low, okay, as the price is coming down, okay, a low is created or the previous high, okay, the previous high, the previous break of structure before the present swing high, okay, that is where you're looking for what? Entry or a low. All right, so let me make it clear. So I'll take the many out. So this is the swing high, okay. So this is the previous area. This is the swing high. This is what? The swing low. When price comes, so this is what? The change of character. I think I drew it too back. So what am I going to look for? An entry. The moment price breaks or changes character, you're looking for entry. in two areas. First area, this area. Okay, second area, this area. These are two places there are liquidity in the market. There are hidden liquidity in the market. Okay, so if market comes here, boom, this is entry, or this entry. So this is entry, first entry, and this is what? Second entry. This is one hell of a strategy that works very well in the market. It's called the breakout strategy. This is one type of a breakout strategy that is linked to market structure. Does this make sense? If it makes sense, put sense on the chat. I'll do for a downtrend. It works in a trending market. This particular one works in a trending market, but it works in all markets. I'm going to do all for all markets, okay? I'm going to do for all markets. I'm going to do for a downtrend, which is also a formula. Yeah. So this is a downtrend. So this is swing high. So there's a breakout structure. There's a breakout structure, okay? So this is a downtrend. You can see that this is a downtrend. The market is moving down. So in this case now, okay, you want the market to break out from a downtrend. So what is your target? A swing high is your target. Am I making sense? So this is a change of character, because the market has taken what? Away the previous what? Swing high. Okay. So where are going to be volume? You want to look out for this is what? A high that was created, or the previous what? So this range, okay, is called the what? Entry range. Okay, so the moment price comes back into this area, entry 1, okay, our price comes into this area, entry 2. So this, both area is called what? The entry range. Does this make sense? Does it align? All right, put 5 on the chart if it aligns. One hell of a good strategy, breakout strategy. I'm gonna time permit, I'm gonna show us in this market. I'll give us an assignment. Okay. So it's quite elaborate when you're using it for a trending market. But for a consolidating market, there's also a breakout strategy for a consolidating market. All right. So market consolidation means market is moving neither what? Let me make it. So a consolidating market is not necessarily a market that is moving sideways. Okay. So this is a range. So market may move like this, or market may move. It means market is in a range, not necessarily because it's just flatly moving sideways. Okay, it's because it's in a range. All right, so that is to understand what our range market. Put range on the chart if you understand that. That's a consolidating market. It's not necessary. There can be an upward consolidation and a downward consolidation. Okay, so you can look at in the mini time frame. This is an uptrend. All right, this is a downtrend. This is an uptrend, but they are all in the same what range. It means market is consolidating. Okay, some can be flat at one price action, moving sideways. Same price action. Okay, same price range, moving sideways. So when you're targeting a breakout strategy, you're targeting the range. So what's the range? Okay. So it doesn't matter what's happening here. This is the range of the market. So what you're looking for is price breaking out of this, coming back to a previous. Don't forget this. Okay. Don't forget this. The previous what? Floor. Okay. Now, you also want to watch out for, never forget this. So in this case right now, there is no swing guy, there's no swing low because market is in a range. But you don't want to forget price action. So there are scenarios. So let me give a scenario. Watch this. This is price. I'm just going to do this right now. So this is all the range. Okay. Let me clean this a little bit. Oh, it's gonna take everything. Level becomes the previous floor. Don't forget that this is all the range, but most time price will come into that range. So first entry, watch out for this, is the overall floor. So this range line is our first entry. That's a break and a retest of that entry, first entry. What's the second entry? The range, the previous floor. So if you see any previous floor, okay, inside of the range, market could go, market could go up into that range and get in. It means market could actually still get into this area and drop, which is the same range between the what? Previous floor and what? The present range. Does that make sense? Okay, that is for an uptrend. That for the downside of the trend is the same thing that goes if the market is ranging. Okay, and it wants to go. So this is the low. When market breaks, okay, it comes back into the range. That is first entry. In this scenario, you can see that there is no low. Okay, the market didn't low before. So the low before rushing down, you now have to watch out for what? This low. Boom. Does it make sense? Put sense in the chat. It's quite simple. Just making it simple within all three what? Trends. So this is called a break and retest. Break, retest, boom, move. It's called what? The breakout strategy. This is one side of the breakout strategy. There's another side of the breakout strategy, which day traders use. Maybe that's not for today. I want us to digest this, okay? If we have any question, we can actually take it. But at this point in time, I just want to see if I can get one or two examples from the market. But is this clear? Put clear on the chat if you guys are clear about this. Let me just see if I can get one or two questions. I want to stop sharing. One or two examples from the market. Beautiful. Let's see. All right. So you guys watch this. So this is gold. I want you guys to watch this right now. So this is literally what I'm talking about. So the market, so this is am I on the same column? Is this white? Why is it not highlighting? Just a moment. Enjoying the training. Okay, it was actually drawing. Let's see if we can clean that now. So I just want to give us practical examples of what it means and how it actually plays out in real time or in record time. So this is a practical example. Let me move to a different chart of gold so we can understand. So first thing is to identify the trend, the pattern, okay? So there's a pattern here, okay? Market move, there's a break of structure here, okay? Move, there's a break of structure here, all right? Moved, okay, came, watch this. I'm a little bit sloppy. Let me use, I don't think I like this. Let me use this other. Let me use a trend line to custom moment. So watch this. So okay, so what do we see here? There's a pattern, right? So this happens to be a trend. You agree with me? So the market has been moving upward. So there's a break of structure here. All right, there's a break of structure here. Slightly some stupid break of structure here as well. Now, what is the swing low? So this is actually the swing low, because why? That is the area that gave what? The present high of the market. Okay, the present high of the market, that's the area that gave it, because why? There's a break of structure. Now, what are we looking for? What did I say? The moment the price breaks below, what happens here? So this is change of character. All right. Slash MSS. After that, what happens? The moment a change of character MSS happens, you're looking for what? Price to come back into what? Any of these previous areas. So it's either we're seeing price coming to these previous areas, okay, or this previous area. In this case, it didn't really push that high. Okay, it attempted it, but it didn't really push that high. Except, now watch. Okay, that's why I said this is kind of sloppy. Except we're not looking at this one, okay, and this one. What did price do? When it broke, so there's a change of character here. This candle actually changed character. Market came back into what? This price action. So this is actually a price action area. Okay, this was a low. This low was more obvious, and that's why price broke, came into it, and what? Dropped down like, all right. But if you were targeting this, that's why sometimes you have to watch out for clear structure. This structure was break, came down, created what? A structure. Okay. Now you want to watch this. Even this other structure that was created when price broke, what did it do? It came back into what? Any of the area that has any small. So I always like to tell you, watch out for this. This is actually an internal structure. Okay. You watch out for this. All right. Previous high, okay, or you can see slightly here, there's a low. Tapped on it and dropped down, okay? But this is reoccurring. The first one you want to watch out for is what? The previous high, okay, or the present low, when market has broken what? That structure. So I'm going to go back a little bit so that you guys understand what I just did here again, step by step, okay? So first we understood what? We're able to establish the trend, or wherever the market is going, we're able to establish the trend, okay? And we're waiting for what? A break of what? Trend, a breakout strategy, okay? And when did it occur? When the market changed character. What is a change of character? When market takes out the low, okay? The low, you want to watch out the low. So this is the previous low. I'm using this low right now because this is all consolidating. This is the previous low, okay? And market, this candle took away that and closed below that low. It means a change of character has happened. So what's the next thing you're looking for? You're waiting for price, okay, to either come to this high, which is our second entry, okay, or it's going to come to this low, which is our first entry. What did Bryce do? After that break, it wicked up, and guess what? We had a trade. Okay, and voila, boom, that executed the trade. Is this clear? Now the question here will be, oh, Kendry, when I take this trade, what's going to be my stop loss? Okay, by price. When you take any of this trade, your entry, because at the end of the day, I told you a strategy must have what? A risk approach. Okay, so if I'm selling this area or this area, I have to have a risk approach. Now, the high, the swing high, a little above the swing high is always the best option. Okay, so your risk will give you your reward. So if you're doing one-to-one, that's it. So the moment price came into that area, one-to-one will be just literally here. It means one-to-one. If you took this trade around here, one-to-one, you're done. Now, if you took this trade around here, one-to-one will be here. That's one, if you're using 1 to 1. Now, if you're doing 1 to 2, okay, you now begin to target the other lows of the market. So every liquidity area is a low. So I may say, okay, where did the trend start from? This was the liquidity. So that gave me what? 1 to 2.5. But the risk is always above the high that was created, because that's where liquidity was dropped from. Does this make sense? So this is for the bullish trend, a breakout of the bullish trend. Okay, I'm just going to go for a bearish trend so that we see when the market was bearish. So we can see that the market was bearish around here. You always want to watch out for the trend. Okay, so this is the bearish. Voila. All right. So something is going to happen. This is actually what? Our what? Swing. I'm going to highlight it. This is our swing high, because why? It is the high that took away. There's a break of structure here. Okay. So that created our new low. Okay. And look at what happened. Whenever that happened, what do I tell you? There's been a change of character. Okay. On a norm, this was supposed to, you have to now watch out for this. There's been a change of character. There's been a market structure shift. You have to wait for the trade. Based off on the strategy, you have to watch the checklist. When are you going to take the trade? It has to come to either this previous high or this area. In the case of this trade, it never did. So this was a trade I just left. It didn't come. So if you're following your strategy, you wouldn't have taken this trade. Am I clear? Am I correct? Yes or no? Okay. It was a fine structure, but it never triggered the entry, because why? You have to wait for it to come to the first entry, okay, or this. So this would have been our entry. It was close, like just like binary trades. Oh, this trade is very close. Okay, but let me find the one that was gold is more of bullish market anyway. So let's find out the bearish market. All right, I think we have a bearish market. Yes, this is a bearish market, but this is a little bit steep. Okay, but I'm just gonna give you guys. Let's draw out the pattern. Break of structure. Break of, so there's break of structure here, so that clearly gives us a downtrend, right? Market came here, boom. Now you guys want to watch out for this, okay? So when did this market break? So if you watch out for this right now, market changed character with this candle. Am I making sense? Market changed character. So there was a market structure shift here. Okay. And what did I say? When market breaks, you want to wait for the market to come back to what? That a previous low. Okay. In this case, market never actually came to a, so the previous low would be, well, this market is a little bit twisty, but I would say market should have come back to any of this top for us to get a good trade. But what did the market do? It just broke, tapped. It tapped. So what it did is this low that actually took it down was the break and retest of it, just like what we had here. Okay, where was this? Okay, just like what we had here. When market changed character, okay, it actually came back to retest this swing, okay, and dropped. So this became the low it respected. So it was either this one or this previous high, okay, and that is the same case with this guy. Okay, so this was the previous low, then this area was the previous high. The previous high and the previous low. Okay, this was the low that was taken out to create what the swing high. So this is the present what swing low. So I'm always using the upward direction. Okay, so if market had come here, good trade, but this was the first entry. And what did it do? So if I had taken this trade for a buy around this area, my stop loss, see why this would have been a very dangerous stop loss, because why? I would have put the stop loss above this area and I would have targeted 1-to-1 minimum. So 1-to-1 would be around, yeah, I think this trade, no, this trade has not done one. Wait, what am I doing? I think I'm doing the opposite side of, so I'm supposed to buy, or I click short. If I'm buying from here, this was supposed to be my risk. This was supposed to be my reward. I would have been out of the market here. 1-to-1, okay, for entering here, and which was good. And the market actually moved more than 1-to-1, did crazy. So if you're doing 1-to-2, so if your strategy is okay, for every trade I take, I must get 1-to-2, this trade actually also gave it. The breakout strategy is actually an effective one, okay, for a trade. So the last one I would do, so I've done for a downtrend, I've done for an uptrend. The last one I'm going to do is for a consolidation, and I'm also using this gold, okay, for the instance. So if you look at this right now, market was moving, okay, sideways in this scenario, okay. This was a sideways movement, and market broke out, eventually came back to retest, and voila, we had a trade upward. So if my entry, it's quite simple on the sideways. What's going to be my entry? Naturally, your entry on the trade has to be break, retest, okay? For retest, I always like the next candle to open. But for a breakout strategy, you just break out, let it come. So sometimes you do a buy entry, buy limit. So this was supposed to be your buy limit because why? That is it. Okay, that is the top of the price. And moved clearly well, 1-to-1. So if you're doing this, your stop loss was going to be here. The take profit one was going to be here. And voila, you're out of the trade. If you're doing 1-to-2, you're also out of the trade. Does this make sense? So that is just basically the breakout strategy, you know, for sideways movement, for a downtrend, and literally for, okay, this is also a downtrend, but didn't complete the strategy, but this is an uptrend. That is it. Did you guys get it so far? Let me know in the chat. What do you guys think about the strategy? So what do you guys think about the strategy? Quite a very good, it encompasses. So what did I say strategy must have? I gave you guys a risk to reward. I gave you guys a technical approach. I gave you guys the type of trading approach. Now, what is the type of trading? This type of trading works for swing, works for day trading, and it actually works for scalping because you can literally switch the timeline, okay, to 5 minutes, 1 minute, the same thing. You can use it for 1 minute, 5 minutes. So depending on the candle timeline you're using it to trade, okay. What is MSS? Market structure shift. No, now, when it comes to approach, entry approach, okay, the strategy. So when I say break and retest, okay, so like if you guys have been learning the price trap or the ARC strategy, there are some modification. Now, what I just gave to you are literally subject to change based on entry. So there may not be confirmation of entry candle. So if but you see, I did it in a way that I did not, okay, tie it to whether a bullish candle or a bearish candle. I just tied it to the area, the confirmation of if it has broken the structure, it comes back to either the high or the low if you're selling, okay? The moment you get that, you get in on trade, put your stop loss above. You don't wait for that. So it may actually be a buy limit. The moment it breaks, just set buy limit or sell limit, okay? Because that is what happens whenever there are break of structure and a change of character, market tends to move in the opposite direction. So you don't have to wait for confirmation candle. You can actually get on trade. But this is not subject to practice. You can practice it with. Okay, so when I'm buying, I have to wait for a buy candle. I have to wait for the market to retest and a buy candle opens for me to buy. And if I want to say, I have to wait for the market to come to the area and a sell candle. Because what that literally just does is it shows you, okay, that I am ready to go. So if you're selling and a sell candle opens and closes, that's good to go. But selling in a buy, candle is buying is more dangerous. It increases your risk. But at the end of the day, it's subject to practice. Okay. I love your approach. I love your approach while teaching us swing high, swing low, MSS, and take profit point. Thank you. You're welcome, Maury. Okay. It's quite an very, very interactive training, right? It's a blessing. You guys have it. Get yourself a strategy. I've taught you guys many strategy. I keep teaching because at the end of the day, I want you guys to master the skill. Can you show how to back test? When you say show how to back test, okay, literally the first thing you want to ask yourself, what are you looking for? Pattern. That's why I taught the pattern, so that back testing is just going back to look at the chart to see if this pattern is what I'm seeing. That's why I said I was able to establish, okay. So the first thing is a bullish pattern. If you look at the note I gave to you guys, okay, I gave you guys this is a bullish pattern, a break of structure, break of structure. So anytime I see it, okay, I want to watch what happened next. The moment it changed character, I started selling. Okay, it's the same thing that goes. Okay, the moment it changed character, it started buying. So the market was trending before. Okay, boom. So let's look at you have to understand the trend. Market was trending. So this is a slight trend. The moment it changed character, boom, it just went. Okay. So you can see that the market was trending low. All right. So this was a trend. Okay. So this is what created this low. The moment it took that away, boom, started buying. So you always, that's the breakout. You always want to watch. So the question was the entry. That's why I gave you guys, you know, two areas you can actually get in. Now there is another approach which stubborn traders or very aggressive traders use. The moment there's a change of character and it breaks and close the candle, close of the candle is the entry. They don't even wait for it to come back. The moment the candle closes, it changes character and it closes, boom, that's the entry. They still use the same guidelines of stop loss. Okay. Can you show how to backtest? Yeah, that's what I'm trying to do. Backtesting on TradingView replay. Okay, do you mean the replay? Oh, beautiful. Okay. I think that's the right question. Now it depends on the version you're using. So you can see there's a replay. I don't know if the free version has it. Okay. But if you see a replay, okay, just click on replay. What it do, the moment you come down on the screen, you see a scissors, you take it back. Okay, you take it back. So now in this case, okay, so let's say I put it here. This is the candle that actually what? Yeah. So what it does is literally just make it as if it's happening right now. And I'll just press play. So under here is play. Okay. So now you can press how fast you want it to go. So if I want it to be slow, I can begin to reduce the speed. But that is literally how it works. Okay. And I can stop it. That's it. Does that make sense? Does that make sense? So any question for me? That's about my time. Okay. All right. Beautiful time. Beautiful time. Was it a beautiful training? It saved you guys. I'll make it available on my YouTube. I hope you all are subscribed to my YouTube. Any question for me? If there is no question, I believe you guys have asked the question. So now you guys have a trade. So whenever I ask again, do you guys have a trading strategy? You should say, oh, I got one. So how do you master a strategy? You understand. First is this video is learning. You first now watch it over and over for you to understand it. Okay. Then start practicing it in real time. Take trades on it. Whenever there's a break of structure and every of these things align on your own, get an account, either a demo or flat account, a small account, get an account for it and start practicing. By the time you go 50 to 100 trades on one strategy, you would have mastered everything it takes. Whether you should take it on a 5 minute, you would have mastered it. Okay. It's all about the time you're going to put on executing it that'll make you a pro. God bless each and every one of you. All right. It's been an amazing session with you guys in training. You know, I told you guys Mondays are always training. Thursdays are always training. Tomorrow, Tuesday, I may not actually be active on because I have a road. I have a road activity. I don't know if I'm going to do my 2 p.m. session, but if I can, I will. Okay. But I believe in the morning, I will be having time to set up the market, show you guys what I am looking at. We're still on EU. We had an SL on German US 30. Okay, I actually wanted to call the buy, but I'd already that's German 30, but I'd already had a trade. Whenever I engage one trade, I can't call two indices, okay, at the same time. Either one indices, one currency pair. So, but let's hope tomorrow we'll have an amazing chat to make money. God bless you guys. Have a beautiful day.